Monkey has leaves. Monkey wants more leaves. Monkey has two choices: buy treehouse or buy piece of a banana company. This is real estate versus stocks, and Monkey has been fighting about this forever. In real estate, Monkey buys treehouse. Treehouse costs 300,000 leaves. Monkey doesn't have 300,000 leaves. Monkey has 60,000 leaves. So, Monkey goes to Monkey Bank. Monkey Bank lends Monkey the rest. This is called a mortgage. Now Monkey owns treehouse. Kind of. Monkey Bank owns most of it, but Monkey gets to use it. In stocks, Monkey buys a small piece of banana company. This is called a share. Monkey doesn't need 300,000 leaves. Monkey can start with 100 leaves, or 10, or 1. Monkey just needs a phone and a brokerage account. That's it. Banana company does well. Monkey's piece becomes worth more leaves. Banana company does badly. Monkey's piece becomes worth fewer leaves. Simple. Most monkeys look at real estate and say, treehouse went up 200,000 leaves in 10 years. That's amazing. That's a lot of leaves. But Monkey is making a very common mistake. The same mistake Monkey made with tax brackets. Monkey forgot about the real numbers. Now the question is, why real estate looks so good? Monkey bought a 300,000 leaf treehouse with 60,000 leaf deposit. 10 years later, treehouse worth 500,000 leaves. Monkey made 200,000 leaves on a 60,000 leaf investment. That's over 300% return. Not bad. This is called leverage. Monkey used the bank's leaves to make more leaves. Stocks don't usually work like this. Monkey invests 60,000 leaves in banana company. Banana company grows 7% per year on average. After 10 years, Monkey has around 118,000 leaves. That's roughly 97% return. Treehouse still wins on paper. But wait, Monkey forgot something. Several somethings. Mortgage repayments every single month for 30 years. Property tax every year. Insurance every year. Maintenance, when roof breaks, when pipes burst, when Monkey tenant puts a banana through the wall. Agent fees when Monkey sells, usually 2 to 3%. Stamp duty when Monkey buys, depending on jungle. These are not small numbers. Over 10 years, these costs can easily add up to 100,000 leaves or more. Suddenly, treehouse return looks a lot smaller. But wait, Monkey can rent treehouse to other monkeys. Now Monkey is a landlord monkey. Rent covers mortgage. Treehouse basically pays for itself. This sounds perfect, and sometimes it is. But tenant monkey stops paying rent, or tenant monkey damages treehouse, or treehouse sits empty for 3 months, or monkey has to deal with real monkey landlord stuff, like inspections, disputes, maintenance calls at 2 a.m. Rental income is real, but it is not passive. It is a second job wearing a disguise. Stocks have their own version of rental income. It's called dividends. Some banana companies pay monkeys just for holding shares. Every quarter, every year. Monkey doesn't have to do anything. No tenants, no toilets, no 2 a.m. phone calls. Monkey just holds shares. Banana company sends leaves. Not all stocks pay dividends, but many do. And Monkey can reinvest those dividends, buy more shares, make more dividends. This is called compounding, and it is quietly one of the most powerful things in all of monkey finance. But Monkey needs leaves urgently. Monkey has stocks, Monkey sells stocks, Monkey has leaves. Same day, sometimes the same hour. Monkey needs leaves urgently. Monkey has treehouse. Monkey lists treehouse. Monkey waits and waits and waits. Average time to sell treehouse in most jungles, 30 to 90 days, sometimes longer. Real estate is not liquid. Stocks are. This matters more than Monkey thinks until Monkey really needs the leaves. Then it matters enormously. Stocks go up, stocks go down, sometimes a lot. In 2020, stock market dropped 34% in 33 days. Monkey panic sold. Monkey lost leaves. Then the market recovered in 5 months. Monkey regretted everything. Real estate also drops in value, but it moves slowly. Monkey doesn't check treehouse price every day. Monkey doesn't panic sell treehouse because one bad headline. This is actually a psychological advantage of real estate. Monkey can't see the loss happening in real time, so Monkey doesn't panic. This is not logical, but Monkey is not always logical. Stocks taxed as capital gains when Monkey sells. In many jungles, long-term capital gains tax is lower than income tax. Monkey holds for over a year, pays less tax. Real estate also taxed as capital gains, but Monkey can claim deductions, mortgage interest, property management fees, depreciation, repairs. In some jungles, real estate gets very generous tax treatment. This is why rich Monkey loves real estate, not always because it performs better, but because tax system rewards it more. Let's actually run the numbers side by side. Monkey has 60,000 leaves to invest. Option A, Monkey buys a 300,000 leaf treehouse with 60,000 leaf deposit. 10 years later, treehouse worth 500,000 leaves. Minus costs, fees, and interest paid over 10 years, net gain roughly 80,000 to 120,000 leaves depending on jungle. Option B, Monkey invests 60,000 leaves in a diversified index fund, average return 9 to 10% per year historically. After 10 years, Monkey has around 118,000 leaves. That's roughly 97% return. Treehouse still wins on paper. Now the question is, which one is actually better? Honest answer, depends on Monkey. Real estate is better if Monkey wants leverage, stable growth, rental income, and is okay with being a landlord. Stocks are better if Monkey wants flexibility, lower entry cost, hands-off investing, and hates fixing pipes. Most wealthy monkeys don't choose. They do both. Treehouse builds equity slowly and steadily. Stocks compound quietly in the background. Together, Monkey has diversification. Monkey is not dependent on one banana company or one jungle neighborhood. Here is the mistake most monkeys make. Monkey waits. Monkey spends years deciding between real estate and stocks. Meanwhile, Monkey's leaves sit doing nothing. Time in the market beats timing the market. Every year Monkey waits is a year of compounding Monkey doesn't get back. The best investment is the one Monkey actually starts. Now Monkey understands the real math. Real estate has leverage, tax benefits, and rental income, but it has hidden costs, low liquidity, and a lot of work. Stocks have simplicity, liquidity, and compounding, but they have volatility and no leverage. Neither is the answer. Both is closer to the answer. Starting is the real answer. And remember, apes together, strong.